Hey guys, welcome back. In today's video, we are talking about Adam Aaron dropping more hints, how the shorts can't go any longer, the levels to break for gamma squeeze, and many more in this video. Now, first we're taking a look at this from Adam Aaron, who talks about it was such a distinct pleasure, so immensely satisfying to be able to report to you yesterday that our second quarter of 2026 with 321.4 million of adjusted EBITDA was the single best quarter result in AMC's entire 106-year history. Now, we've already talked about yesterday, so make sure you go check that video out. But essentially what you have to know is ultimately AMC is doing very, very well. We've reported the best earnings ever in 106-year history. We've seen improvements in areas where it's pivotal for AMC, where it's extremely crucial to understand how going into the future, how AMC is going to operate, and on all those fronts, we are doing well. And so some of the things that obviously goes down to is talking about the guests going to theaters. You can see 71 million, the highest revenue, managing cost well. We talked about operational leverage. We talked about cutting down some certain operational costs. One of the things we talked about in the past has been closing down theaters that are not profitable and opening up in locations that are deemed very, very good. And so these are all things that AMC is doing. More importantly, we have $778 million of cash on hand. So this is how we're going to be seeing AMC continuously making improvements, continuously grow it going into the future. And so the best way to silence the critics and make the naysayers irrelevant is to produce undeniably good results. And in this case, Q2 results was exactly that. And now, in terms of where I think Adam Aaron's dropping hints, just before AMC dropped their earnings on Monday, on the 16th of July, Adam Aaron actually dropped a tweet where he talked about how many people will be keen to look at the result. And so we already knew that the Q2 results was very likely going to be good, even before any expectations whatsoever. Now, there were obviously hints that were already dropped along the way in terms of data that we were looking at with box office, with the operational cost. But Adam Aaron definitely dropped us the biggest hint into telling us that it was going to be well. Now, what I think is how he's talking about going to the future, how AMC is going to continuously produce results like this. Now, he gave a shout out to the apes, talking about to those apes who stood by us along the way, and especially to those who are with us still. I'm not exaggerating in saluting the role you all played in saving moviegoing and saving movie theaters and saving AMC. Now, this is obviously what we talked about with how apes have played a crucial part. Wherever you're someone who invested in AMC, wherever you're someone who's done due diligence, who've shared about AMC, who's gone to even AMC to watch movies and told your family and friends about it, these are all things that are, of course, supporting AMC. But what I think is more important is talking about Adam Aaron in terms of dropping the hint of going into the future where we are going to be. Now, we are seeing essentially no chance of bankruptcy now whatsoever. When we take a look at AMC, we are seeing the complete opposite happening. And going into the future, we are on a very strong and bright path. And that's what definitely Adam Aaron is trying to say, and of course tell us what he's very likely going to do. Now, when you take a look at it in further detail, some of the things that we did mention in yesterday's video, which again, going into the future is going to be extremely important, because it links to things like buybacks, like dividends. And so what we are looking at is how, firstly, in the case of the equity we've raised in second quarter this year, we had a debt maturity coming up. The alternative to not paying that debt would have been catastrophic. So we made sure we raised the cash we need to prosper. We also know that cash is king, and the thing that separated the companies that survived COVID is that they had cash in the bank. And so firstly, we have to understand why AMC did dilution. And again, at the end of the day, we talked about this. People are unhappy with dilution, and we completely understand that. However, you got to look at it from the perspective, would you rather your investment go completely to zero, AMC get delisted, AMC goes to bankruptcy, or AMC dilutes, pays off the debt, survives, and grows bigger in the future? For me, I would obviously take the latter option. But it's even more important to understand that what they're doing right now isn't just for the short term, but also for the long term. You can see he talks about we have a little way to go to the cash flow positive, for a full 12-month year. But this is already seeing where AMC is going. Now, going cash flow positive is extremely vital for AMC. One of the biggest reasons for this is just something what we mentioned earlier, is talking about buybacks and dividends. If you're unhappy with dilutions, then a buyback solves that. It dilutes in the front in the short term, and when we get the money and we have a big cash pile, we're able to buy back shares, which ultimately negates the previous dilutions that we've done. Now, this relies on AMC having firstly good fundamentals, what we're seeing, and of course a cash flow positive state, and that's something that we are closing towards. And so this is the first thing. So for those of you who are unhappy about dilution, remember AMC will have ways to combat that in the future. But the ones who are eyeing up the squeeze, and I'm sure there's the majority of you, another thing about going cash flow positive and paying off these debts especially is understanding that these were previously the barriers which were preventing us from offering a dividend. And offering dividends has always been on our list in terms about what could trigger a squeeze, because we talked about by having the ability to offer dividends and by actually offering dividends, you are forcing the shorts to pay dividends on every single shares that they are shorting. So when you talk about how many shares they're already shorting, the FTDs, the swaps, the options, and then you include synthetics, we obviously understand how that is going to be extremely impactful for us and how that's going to cost shorts hundreds of millions of dollars, potentially even billions of dollars every time AMC offers a dividend. And so that's eventually going to eat into them and obviously trigger the squeeze. And now, for those of you who are wondering, firstly, we've refinanced $400 million of debt, extending the maturity by 4 years. And what we obviously did was raising $285 million through stock offerings and eliminated that. So since the end of 2020, we have reduced our debt by $1.7 billion. So if you are wondering about the barriers, if you are wondering about how close we are going towards paying off these debt, this is the effort we have done so far. And remember, AMC won't have to rely on dilution, on offering in the future anymore, as we see the stock kind of current fundamentals that we are in right now. Remember, AMC is only doing this right now because of the fact that they need a fast way to get rid of debt. They need this is by far the quickest way they can raise cash, by doing offering. But precisely by doing offering and that firms are willing to actually buy these shares, it already shows you just the demand for AMC shares that are right there. But it's also understanding that in the future, as we see AMC go cash flow positive, as we see the profit margin goes up, as we see the revenue increase even higher, you're going to be seeing how AMC will have the money naturally to pay off these debt. So we are going to a situation where we will be seeing AMC paying off $200 million worth of debt, $400 million worth of debt, without seeing kind of the pairing that comes with dilution, because that's exactly where AMC is headed to. But another big thing is that firstly, we are still expecting further reduction on 75% of AMC's debt, which saves AMC $51 million annually. So this is also another big thing. Ultimately, we need to see AMC in a position where they are able to put themselves in a snowball effect, where they're able to compound their investments, their revenue, the money that they have. And the biggest things they can do is, of course, reducing these interest payments. And that's exactly what we are doing. We've already seen how the interest rate going down has saved us millions, tens of millions of dollars. But what we are going to see right now is just every quarter, every month, AMC is going to have a lower operational cost, a lower costing interest payment, because we are doing things like this. So if you don't get it by now, I am extremely happy about the earnings. I'm extremely happy with everything AMC has done, including the offering and dilution, because I definitely think that that is something that it's even positive in the short term, but it's going to have an even bigger positive impact in the long run. Now, what's funny about all of these things is that prior to AMC releasing their earnings, and bear in mind, this is the best earnings we've seen in the 106-year history, we had Jim Cramer talk about AMC, and this was before the earnings report, telling people to stay away from AMC, telling people that AMC was not a buy. Bear in mind, on the day of AMC releasing their earnings, we went up 24%. So once again, when we talk about, are these institutions, are these social media, mainstream media, trying to actually give you the right understanding, trying to actually help you? Well, Jim Cramer has already shown us what that answer is. And for me, the answer is no. They're not here to help you. They're here to obviously try and take the shares away from you. Because Firstly, we already talked about how during Cramer 4, AMC was a buy at $30, yet he doesn't think that AMC is a buy now. And despite AMC has already released record earnings, he hasn't said anything in combat to what he said about staying away from AMC. And so ultimately, we understand that he's doing anything he can in an attempt to get people to sell their shares because he knew, and along with the institutions, that AMC is going to be exceptional. And so Adam Aron can't say it any more clearly to Wall Street than this. Demonstrates for all to see the significant operating leverage inherent in AMC's business model at time of rising revenues. So someone's going to break ranks, try to cover, and others simply go long. This is the AMC MOAS. And this is very important because the operational leverage is something we talked about already, where if we see this continue and we see how the box office is going to go even bigger, and we see that the AMC revenue is also going to increase along with that, you're going to be seeing an even better earnings going into Q3. You're going to be seeing how AMC will be able to break records again. Now, this is of course understanding that everything is kept at constant whilst the revenue of the box office and AMC increases. But we are seeing that right now because we're seeing AMC make the improvements, because we're seeing AMC cutting down interest payment, because we're seeing how the majority of the box office comes in Q3 and Q4. AMC is going to have the same operational leverage while seeing an even bigger revenue. And this is why we talked about how Q2 earnings was important, because it wasn't just to let us know how well we did in Q2, but more importantly, how well we're going to do in Q3 and Q4, arguably the most important times for AMC. And so this is why we understand that people are going to be accumulating, people are going to be stacking up, because by the time Q3 earnings comes, by the time Q4 earnings comes, you're going to be seeing how AMC is going to be in a whole different position. And before you know it, AMC will have the cash flow to be able to buy back shares, to be able to pay dividends, be able to pay off all of the debts. And that's exactly what we are looking at right now and exactly what we're waiting for. But of course, with all of these good news, what you're going to be seeing suffering for AMC is, of course, the value price. But this is obviously insane, despite the fact we've broken so many records and beat expectations so many times. But precisely because of this, we understand that this is because we're in a good position. Remember, when a stock that isn't faced with manipulation, when they release good earnings, you see how well they do. When we take a look at exactly companies, wherever it's like IBM, like Dell, during the times they've released their earnings and we saw how well they did, you saw how those stocks shot up. And the thing for AMC is that we are not experiencing the same because we are faced with manipulation. But the only reason for why we're faced with manipulation is because short sellers are stuck. And so I'm not worried about how AMC price hasn't gone up another 50% today, another 20% today, because we were used to this, we were expecting this. But eventually, when AMC releases their earnings in the future, you're going to see how you can't hide it anymore, because there is just no way institutions would allow a stock to sit so cheap when they're doing so well. And that's when AMC is going to run. And bear in mind is that yesterday's volume was the highest since the first 3 days when the Roaring Kitty came back. And I think it's important because it shows just how much power we still have. It talks about how much attention there is in AMC still. And more importantly, it talks about how right now, especially driven by fundamentals, institutions want to accumulate. And this is pretty much the ultimate thing that we are talking about. It's just how companies want shares right now, and in my opinion, more than apes, because we apes, we understand why we buy into AMC. We've always continuously bought into AMC. But right now, for these institutions, for them, they're seeing kind of the ultimate opportunity of a lifetime, because they've realized there is no way a stock should be this cheap despite the earnings that they are releasing. And so it's why we've been seeing the institutions trying to accumulate as much as possible. And if I'd argue, like I said, I do believe that currently the demand is even greater for these institutions, because they know, even with their calculations, with their algorithms, with their models, just how undervalued AMC is to a very precise level. And for them, it wouldn't be logical for them to stay away from AMC any longer. And so this is what we have to understand. Now, as always, this is financial advice, and I'll catch you guys next time.